Autumn's nearly upon us, and as the holiday season starts to wind down, we've got a quieter week than usual coming up. The big features will be the release of UK mortgage approval figures on Thursday the 30th of August, and the latest UK Consumer Confidence Survey from GfK on Friday the 31st. You could conceivably argue that the two are linked, at least if you look at this graphic. The headline GfK Consumer Confidence reading has been soggy for some time, and mortgage approvals have dropped year on year for 9 months in a row. Also, watch out for the sub-index in the GfK survey that looks at major purchase intentions, because what could be a bigger buy than a house? Under these circumstances, the weak performance from the FTSE All-Share household goods and home construction sector this year may be understandable, despite the fat yields on offer from some of the house builders. A decline of 8% in the sector compares to a broadly flat showing from the FTSE All-Share and leaves it ranked just 32nd out of the 39 industry groups that comprise the FTSE All-Share benchmark index, and this is after a bit of a rally this summer. In terms of companies reporting, we have a smattering of scheduled interim and final results and trading statements, including specialist distributor Diploma and oil equipment and services play Petrofac on Wednesday the 29th of August, recruitment firm Hayes, retailer WH Smith and another oil equipment expert Hunting on the 30th, and Frankie and Benny's owner Restaurant Group on Friday the 31st. But the only FTSE 100 firm set to release results, and therefore the one most likely to cause a fuss in the week ahead, is support services group Bunzl, whose first half figures are due out on Tuesday the 28th of August. For those who've not come across Bunzl before, the company supplies the things that other firms need in order to do business, but not items they sell to customers. So for example, Bunzl supplies disposable coffee cups to cafes and food wrap to supermarkets. Unusually, Bunzl's first half trading statement in June didn't please everyone, and the shares have basically gone sideways for the past year, as we can see here. Two issues seem to be at work here. First, Chief Executive Frank van Zanten noted a slowdown in growth to what he called more normal levels. Total first half sales rose 11% year on year, with foreign exchange movements adding 6% to sales and underlying growth of 5% accounting for the rest. The key question here may be the stock's valuation. At just north of £23 a share, the shares are trading on nearly 18.5 times forward earnings for 2018, with a forward dividend yield of 2.1%. That's a high valuation relative to the wider UK market, especially for a firm that's talking about growth rates normalising. At least foreign exchange movements are going the company's way again, as Bunzl gets 60% of its sales from the US, so a weaker pound will make that business worth more once it's translated into UK pounds. When it comes to the numbers themselves, 3 items are worthy of your attention. The first is operating margin. Bunzl's return on sales has been pretty stable at 6.5 to 7% for the last decade or so, on an adjusted basis, as we can see here, although the stated number has been more volatile owing to restructuring costs related to companies purchased. The second is acquisitions. Bunzl bagged 2 deals in the first quarter, but rather unusually none in the second, when it actually sold a business. This might be one reason why Bunzl is finding it harder to grow at the same pace, if only because it's getting bigger. Also, keep an eye on the balance sheet where the firm ended 2017 with £1.5 billion in debt, although the interest cover was more than comfortable at around 8 times. And the dividend. As we flagged last time, Bunzl is one of just 27 FTSE 100 firms to have increased its dividend for all of the past 10 years consecutively. In fact, Bunzl's dividend growth streak stretches back to 1994, so Chief Executive Fran van Zanten will doubtless be looking to keep that run going. According to Analyst consensus forecast, Bunzl is expected to pay a total dividend of 49.3 a share, up 7% on last year. So that's your benchmark for the interim payment. Last year's first half dividend was 14 a share. Thank you for watching, and I look forward to seeing you next time.